30 rows, and hidden inside it is the entire truth about a commercial property: who pays you, how long they pay, and where the deal quietly falls apart. It is called the rent roll, and it is the single most information-dense document in all of commercial real estate. Read it right, and you can size up a deal in 5 minutes. Read it wrong, and you buy someone else's problem. In the next few minutes, I am going to show you exactly how to read one like a broker. Let's go. Here is why this matters. Every number on a commercial deal, the cap rate, the price, your return, starts with the income. And the income starts with the rent roll. It is a tenant-by-tenant snapshot of who is paying, how much, and for how long. But here is the catch. The rent roll is the seller's version of the story. A good one shows you exactly what you are buying. A bad one hides the problems behind clean formatting. Your job is to see past the layout and pull out the 5 things that actually move the deal. Let's break it down. Start with the basics. A rent roll is a schedule. 1 row for every tenant in the building, plus a row for every empty suite. Each row tells you the tenant, the space they occupy, the rent they pay, and the dates their lease runs. Add up the rent column and you have your in-place income, the starting point for every calculation on the deal. Think of it as the income x-ray of the property. In 30 rows or less, it tells you what you are actually buying. Now the columns. A typical rent roll has about 10, but only 5 really drive your decision. Tenant name, that is your credit quality. Suite and square footage, your SF, and it had better add up to the building total. Base rent and rent per square foot, your income, and your read on whether each tenant is paying above or below market. Lease start and end dates, that is where rollover risk lives. Escalations and options. Do the rent step up, and can the tenant renew? And the recovery type. Is it triple net, where the tenant pays taxes, insurance, and maintenance, or gross, where you do? A triple net dollar and a gross dollar are not the same dollar. Read the type before you trust the rent. Here is the trap that catches new investors. There are 2 kinds of occupancy, and they are not the same. Physical occupancy is how many suites are filled. Economic occupancy is how much rent is actually hitting your bank account. A building can be 100% physically full and still be bleeding because a tenant is in a free rent period or signed with months of concessions or sitting in a suite they have stopped paying for. The rent roll shows you the lease. It does not always show you the cash. So always ask, of the rent on this page, how much is actually being collected today? Real income, not advertised income. Next, look at the dates and build a map of when every lease expires. This is rollover risk, and it is one of the biggest hidden dangers in any deal. The number that captures it is WALT, weighted average lease term. The average years of income you have locked in, weighted by how much rent each tenant pays. A long WALT means stable, durable income. A short one means tenants get to decide soon whether to re-sign or walk, and watch for a cliff. A wall of leases all expiring in the same year. Here is my rule. Anytime more than 25% of the rent is rolling in the next 24 months, you discount your offer. That rollover is real risk, because tenants can leave, and they do. Last, ask who is really paying you. Run the math on your largest tenant. What percentage of the total income comes from that one name? If a single tenant is more than half your income, that is concentration risk, and over 70% is dangerous unless that tenant has investment grade credit and a long lease. Then weigh the credit. A national investment grade brand on a 15-year lease is almost a bond. A local mom and pop on a short lease could vanish next year. A strip center that looks like 5 tenants might really be 1 credit tenant with 4 bonus tenants decorating the rent roll. Know which one you are buying and price it that way. Here is your 5-minute scan. Run it on every rent roll you ever see. 1. Does the square footage actually add up to the building total? A mismatch means a ghost tenant or a measurement game. 2. Map every expiration date. how much rent rolls in the next 24 months. 3. Compare each tenant's rent per square foot to the market. Below market is upside, above market is where deals die. 4. Economic versus physical occupancy. How much rent is truly being collected, not just contracted? 5. Top tenant concentration. What percentage of the income rides on one name? And 6. Check the recovery type on every line. Triple net, modified gross or gross. Run that list and no rent roll can hide from you. Now, the mistake that costs people real money, treating the rent roll as fact. It is not fact. It is the seller's claim about the income. The rent roll says a tenant pays $5,000 a month. The lease might say that tenant can terminate after year 1, or got $50,000 in free rent, or is already expired and sitting month to month. Same line, completely different reality. So verify everything. Match every row against the actual signed leases. Reconcile the income against the T12, the trailing 12 months of real operating numbers, and get tenant estoppels to confirm the terms. The rent roll points you where to look. The leases and the T12 tell you what is true. Let's lock it in. A rent roll is a tenant-by-tenant snapshot of the income, and it is the foundation under every number on the deal. It has about 10 columns, but 5 decide it. The tenant, the square footage, the rent per square foot, the lease dates, and the recovery type. Remember that physical occupancy is not economic occupancy. A full building can still be half paying. Map your rollover in your WALT and discount hard when more than 25% of the rent rolls inside 24 months. And never forget the big one. The rent roll is the seller's claim. Verify it against the actual leases and the T12 every single time. If you have a rent roll in front of you right now and you want a second set of eyes, that is exactly what we do. I am Ryan Solberg with MaxLife Commercial. We help investors read the documents, underwrite the income, and close the right deals across Central Florida and the entire state. Run the numbers with our deal analyzer at maxlifedevelopment.com or call us directly at 321-586-2121. Let's make sure the deal is as good as the rent roll says it is. I will see you in the next one.